Thank you too. You certainly are worthy of praise for doing battle with your indisposition and still addressing this audience with a great deal of vitality. Thank you very much, Mr. Mohammed Rafi. Next of our speakers, I believe, is very well known to people here in Sri Lanka and hardly needs introduction. But of course, he's an academic and also has been a consultant for business, so with hands-on experience with the real world, as one might say. So we are very happy to have our special speaker and guest speaker, the director of the Postgraduate Institute of Management at the University of Sri Javatripura, Professor Uditha Liyanage.
Honorable Rishad Patudin, Professor Lakshman Vatavela, Mr. Mohammed Rafi, His Excellency Bruce Levy, distinguished foreign delegates, ladies and gentlemen. Let me tell you at the outset that I'm extremely pleased to be a part of this summit and to talk about a subject which has gained much currency over the last decade and a half, the subject of sustainability. We have two operative terms, sustainability and corporate responsibility. And I think it might be in order to define these two key terms which underpin the theme of your summit. Sustainability has been variously defined, but I believe one that captures the essence of sustainability was first defined and described in 1987 at the UN conference. It is simple and pointed. Sustainability is to meet present needs without compromising the ability of future generations to meet their needs. Meet present needs without compromising the ability of future generations to meet their needs. So when one talks about sustainability, we're talking about what I call FVPA, future value of present action. It is an action, a course of actions that we take here and now, which will impact tomorrow. Now, sustainability entails three key dimensions, and this has been well established in the literature. You have the economic dimension, you have the environmental dimension, and you have the social dimension, popularly known as the 3 Ps: profit, people, and the planet, the triple bottom line. Now that's what sustainability entails. Let's look at corporate responsibility. What does that mean? The Department of Business, Innovation and Skills in the USA defines corporate responsibility thus. Corporate responsibility can be defined as how companies address the social, environmental, and economic impacts of their operations and so help achieve sustainable development goals. So Professor Vatavela, we got a problem here. Because if one is sustainable in one's actions, you inevitably become a responsible corporate citizen. I remember 3 years ago, Professor Vatavela asked me to speak on an occasion like this, and I said that his corporate theme was flawed. because the conference theme was managing the corporate bottom line. And I argued that you cannot manage the corporate bottom line. You can only manage for the corporate bottom line, because the bottom line is the consequence. So today, I would say, in lighter vein, perhaps tongue-in-cheek, that your theme is valid but superfluous. Because if you are sustainable, you are being responsible. So maybe you could have done away with one word. Now, we also use the term corporate social responsibility, CSR. Now, where does CSR figure in this whole scheme of things? CSR refers to the social dimension. We talked about 3 dimensions, if you recall: the economic, the environmental, and the social. So CSR is exclusively relates to the social dimension. It does not address the environmental dimension, nor does it address the economic dimension. But if you leave the definitions aside, if you look beyond and across these definitions and descriptions, I would argue that any thriving organization has to do 3 things, in a sense. A, it has to do well. It has to perform well. It has to generate a surplus. Of that, there is no doubt. So it has to do well, first and foremost. Secondly, it has to do right. Do the right thing. Follow the rule of law. Governance, transparency. Very much a subject of doing things right. So do well, do right. And thirdly, you also need to do good. Because you are an organ of society, a part of society, and you've got to do good in relation to the community in which you operate. So forget the definitions. I think you're talking about fundamentals here. You have to do well, the economic dimension, you have to do right, and then you have to do good. Now the question does arise, if you are sharply focused on the economic dimension, making money, doing well, having a surplus, then are you doing so at the expense of the at the expense of the social and the environmental dimensions? Is there a conflict here? In other words, by spending money and time and energy on the social dimension, the community, and the environment, are you taking your eye off the ball? And that's the question that needs to be asked. Mr. Rafi referred to the corporate's responsibility to its shareholders. So by spending money on social and environmental initiatives, are you actually helping the shareholder? Now, way back in 1970, no less a person than Milton Friedman, the Nobel Prize winner, argued, plausibly perhaps at that time, and strongly. And let me quote Milton Friedman. According to Friedman, in a free society, there is one and only one social responsibility of business: to use its resources and engage in activities designed to increase its profits, so long as it stays within the rules of the game, which is to say, engage in open and free competition without deception or fraud. So he says, there is one and only one social responsibility of business, and that is to use its resources and engage in activities designed to increase its profits. Friedman goes on. He argues that the state should in fact address social problems, and says that an executive, by taking money and resources that would otherwise go to owners, shareholders, employees, and customers, and allocating them according to the will of the minority, fails to serve the interest of his or her principal, the shareholder. In this way, the executive imposes a tax and spends the proceeds on social purposes, which is intolerable, since he or she has neither the skills nor the jurisdiction to do so. So Friedman argues it is a distraction. What the company must do is to increase its wealth, its profits. Looking at the community, looking at the environment is a waste of time. It's taking your eye off the ball. Now, this argument is no longer valid. It has no clout. It has no currency. Why? Because of two factors. First, what I call the push factors. The nature, the size, the scale, the stature of the corporate, of the company has changed radically over the last 2 decades. And let me quote some very interesting numbers to convince you that the role of the corporation has changed dramatically. And therefore, the company can no longer say, I'm only concerned about profits. The society and the environment are not my concerns. They can no longer afford to say that and defend their position. Today, brands in particular of companies and corporations are more powerful than nations. It is estimated that brand value would be as much as 1/3 of the entire value of global wealth. Let me give you some interesting numbers. According to 2010 survey of Interbrand's most valuable global brands, the intangible assets, only the intangible assets, of the top 100 brands are together worth 1.4 trillion US dollars. To place this number in context, it is equal to the combined gross national income of all the 63 countries defined by the World Bank as low income, and where a little over half the world's population lives. Mitsubishi by itself is larger than the economy of Indonesia, the 4th most populous nation in the world. General Motors is a bigger economic unit than Denmark. Walmart is bigger than 16 sovereign states. The Ford Motor Company is bigger than Turkey, South Africa, or Saudi Arabia. Toyota is bigger than Norway. So the point I'm making is that the companies can no longer say, hey, it's all profit. We don't care about the community in which you operate. Because their role, their stature has changed dramatically. There's another reason why companies cannot gloss over the social and the environmental dimensions. And I call them the pull factors. This is the ethical marketplace, the green marketplace that's emerging. Let's look at some numbers again. There is a new market segment, if you like, that is emerging. And this is called the LOHAS market. Lifestyles of health and sustainability. And let me quote the numbers here. According to NMI LOHAS business director, Gwen Rogers, the first Earth Day was 40 years ago, and the green marketplace was just taking shape. Today, a majority of consumers are incorporating environmental considerations into their day-to-day lives. Not just in terms of their attitudes and values, but rather by voting behaviorally with their dollars. They spent in 2008, 290 billion US dollars. So you have the push factors, which is the fundamental radical change of the role of the corporate on the one hand, and the pull factors, where the market now demands products that are environmentally friendly and socially responsible. And therefore, Friedman's thesis has no validity any longer. Now, finally, let me revisit a question that I posed in passing. Is there an element of sacrifice in organizations being sustainable, in looking at the environment and the community? Is this about spirituality in the organization? Is there a trade-off, in fact, between doing well and doing good? Let me repeat the question. Is there a trade-off between doing well and doing good? Now, the traditional approach has been, we are fulfilling an obligation, a social obligation. That no longer holds water. Today, the new approach is that, yes, we focus on the environment. Yes, we focus on our community because we are supporting corporate objectives. The famous Cohn and Roper study, 2007-2008, has these numbers. 84% of the respondents of this survey said that they have a more positive image of companies that do something to make the world a better place. 78% said that they would be more likely to buy a product associated with a cause they cared about. Companies that promote and champion a particular cause. 64% said that they would switch brands to support a cause they cared about. They would switch brands if a particular company promoted a cause that they would buy into. Philip Kotler and Nancy Lee recently, in their book, Corporate Social Responsibility, establishes a very interesting connection in their research. They see a connection between corporate reputation and sustainability. And then they also see a connection between what they call repeatability and corporate reputation. Repeatability is a customer coming back to the organization to buy. So in business, it is one thing to get customers, but the real challenge is to retain them and to keep them. And research indicates that sustainable initiatives, one way of doing that. Walsh 2007 examined 122 published studies between CSR and financial performance and found that there is a positive correlation between CSR initiatives and long run, let me underscore that, long run financial performance of corporations. The point I'm making is that it does pay to be sustainable. Therefore, today's modern organization cannot afford to gloss over this vital central issue of sustainability and thereby become responsible as a corporate citizen. Thank you very much indeed.
Thank you too, Professor Uditha Lianagebi. Certainly were able to appreciate the dismantling of the Friedman position and now a factor, push and pull as well, which helps us to appreciate the need of a changing scenario. And now, as was previously mentioned, there has been a winsome confluence. Canada with Sri Lanka, especially in this area of a professional accountancy or management accountancy qualification. And with that as a background, it's a privilege to have High Commissioner for Canada, Mr. Bruce Levi, who we will now invite to the lectern.
seems as though sore throats are going around today. I'm the third with one, but I'll try to soldier through. I promise not to sing. Honorable Minister of Industry and Commerce, fellow head table guests, ladies and gentlemen, it's an honor to be invited here as a Canadian representative to mark the good work done by my predecessors back in the year 2000. I'm always happy to come and take the credit, even though none of the actual work was done by me. But it does give us pleasure to see what a thriving concern CMA Sri Lanka has grown into from that initial involvement. So congratulations. The topic, the theme of this conference, is one that's very near and dear to Canadians, and corporate social responsibility, which I propose to address for a few minutes, and its links to sustainability, is something that we have chosen to not be defensive about, but in fact to be proactive. And in particular, I'm going to talk to you tonight about our experience related to the so-called extractive sector, which is really mining and resources. It's an area in which Canadian industry is among the world leaders, so it makes sense that that is where we would focus. A single definition of corporate social responsibility, or CSR, does not really exist, and it's a concept that continues to evolve. In Canada, the CSR strategy for the extractive sector is generally defined as the voluntary activities undertaken by a company to operate in an economically, socially, and environmentally sustainable manner. That's easy to say, of course, perhaps less easy to practice. The Government of Canada encourages and expects Canadian companies working internationally to respect all applicable laws and international standards. They should operate transparently and in consultation with host governments and local communities. They should continue to develop and implement corporate social responsibility best practices. But at the same time, Canada recognizes there is a limit to what companies can provide to support the social, health, and environmental concerns of the communities where they operate. Host governments are responsible for legislation and programs that meet the needs of their citizens. Canada's approach to CSR is focused on the voluntary engagement of the private sector. The Government of Canada believes that voluntary measures can advance CSR objectives in a flexible, expeditious, and less costly way than through regulation. Canada's long history in the promotion of corporate social responsibility is partly through adherence to the Organization for Economic Cooperation and Development guidelines for multinational enterprises. These OECD guidelines are a framework of voluntary standards and principles for responsible business conduct. They provide general and specific recommendations in a number of areas, including disclosure, employment and industrial relations, environment, and combating bribery. Although the Government of Canada recognizes that CSR is an important element of all business operations, in the context of Canada's international business and investment, it is of particular relevance to the extractive sector, a resource industry which, as I said, we are among the leaders. It's for that reason that the Government of Canada developed a CSR strategy that focuses on the international extractive sector. In March 2009, more than 3 years ago, Canada announced a comprehensive plan, Building the Canadian Advantage, a CSR strategy for the Canadian international extractive sector. That would be our answer to Milton Friedman. The strategy was informed by consultations undertaken with a wide range of stakeholders. The CSR strategy contains a variety of measures designed to help Canadian mining, oil and gas companies meet and exceed their social and environmental responsibilities when operating abroad. The fact that these Canadian companies continue to lead the world in terms of profits shows that the two objectives are not mutually exclusive. The strategy aims to increase the competitiveness of Canadian extractive sector companies operating abroad by enhancing their ability to manage social and environmental risks. It also reinforces our commitment to work with host countries to better enhance economic development and benefits to communities from responsible natural resource management. The CSR strategy for the extractive sector is grounded in complementary pillars, which engage a variety of stakeholders and promote various aspects of corporate social responsibility. One pillar involves strengthening host country resource governance and enhancing the ability of developing countries to manage the extraction of minerals, oil, and gas, and to benefit from these resources to reduce poverty. The extractive sector can be a driver for sustainable economic, environmental, and social development by increasing state revenues and providing a source of sustainable economic growth and employment for local communities. CIDA, which is the Canadian International Development Agency, and Natural Resources Canada, which governs our resource sector, work to support bilateral and multilateral initiatives that enhance the capacities of developing countries to manage natural resource development. In a number of countries, CIDA has been active in building and modernizing the governance regimes to ensure that natural resources are managed in a technically and environmentally sound manner. These efforts will improve prospects for developing countries to benefit from their own natural resource endowments and to achieve economic prosperity. For its part, Natural Resources Canada contributes technical expertise and policy advice to various capacity-building initiatives through requests transmitted by Canadian missions abroad, as well as in support of CIDA-sponsored initiatives. Another pillar of the CSR strategy is the promotion of widely recognized international CSR performance guidelines. One of these, a key one, is the OECD Guidelines, a government-endorsed framework of voluntary standards and principles for responsible business conduct. They provide general and specific recommendations in a number of areas, including disclosure, employment and industrial relations, environment, and combating bribery. The second standard explicitly promoted by the strategy is the International Finance Corporation Performance Standards on Social and Environmental Sustainability. The performance standards set expectations of conduct in 8 areas, including social and environmental assessment and management systems, labor and working conditions, pollution prevention and abatement, community health, safety and security, land acquisition, and involuntary resettlement, biodiversity, conservation, and sustainable natural resource management. The voluntary principles on security and human rights provide guidelines to help extractive sector corporate actors anticipate and mitigate most risks related to the deployment of public and private security, such that operations can be protected without excessive force or human rights abuse. This guidance is relevant for all field-level security implementation, including for companies operating in areas affected by weak governance, armed conflict, or insurgencies. Canada is the chair of the voluntary principles for 2012. The Global Reporting Initiative includes reporting principles, guidance, and indicators for organizations of all sizes in every sector. The Global Reporting Initiative provides guidance in the reporting of CSR practices and performance. It is broadly recognized as the de facto international reporting standard. Investors, insurers, consumers, and other market actors are increasingly seeking reliable information on how extractive sector companies are managing their social and environmental impacts. Canadian government offices in Canada and abroad can access $250,000 annually just to promote CSR with Canadian business clients and local stakeholders. The CSR Counselor's Office also promotes these standards as part of its mandate, and the EDC, Export Development Canada, our Ex-Im Bank, works to promote the CSR standards under the strategy. Extractive projects with significant environmental and social impacts must successfully meet the IFC performance standards in order to receive EDC support. The Office of the CSR Extractive Sector Counselor makes up the third pillar of the CSR strategy. The office opened in Toronto 2 years ago with a mandate to review CSR practices of Canadian extractive sector companies operating abroad and to advise stakeholders on the implementation of the endorsed standards through information and events in the public interest. In fulfilling the review portion of the Office of the CSR Counselor's mandate, the office will be an impartial advisor and facilitator, an honest broker, if you will, that brings parties together to help address problems and disputes. The office will create space for constructive dialogue and problem solving. This approach is based on the view that a credible, impartial, and transparent process with appropriate checks and balances may find win-win options to resolve disputes. And to this end, the office has established a review mechanism to guide the facilitation process. The review mechanism process provides space for people to come together in the search for solutions and in the resolution of disputes. It is based on voluntary engagement and responds to a need for a low barrier to entry process that can foster constructive dialogue and improve the situation on the ground. The CSR Centre for Excellence was officially launched in January 2010. The Canadian Institute of Mining, Metallurgy and Petroleum acts as the secretariat for the centre, with the support and involvement of a broad range of stakeholders, including representatives from industry, civil society, academia, indigenous communities, and expert practitioners. Government officials have observer status. The centre is designed to function as a hub of knowledge on CSR-related practices and approaches for the extractive sector through the development and dissemination of high-quality CSR tools, training and information, and targeted learning events. The CSR tools and information provided by the Centre are relevant to industry, civil society, and governments at home and abroad. Canada also supports ISO 26000, a voluntary international standard approved in 2010 that provides guidance on social responsibility across all sections. Canada has also provided support to the United Nations Global Compact as a valuable framework for businesses to integrate principles of CSR into their operations since its inception in 2000. And yet, as more evidence of the vital importance that Canada places on this issue, less than a year ago, in October 2011, our Prime Minister announced the creation of the Canadian International Institute for Extractive Industries and Development,